What happens when the entire country needs air conditioning at the same time, but the power grids are running out of coal? Right now, India is bracing for a record shattering peak power demand of 270 gigawatts. Meanwhile, evening electricity prices on the exchange are skyrocketing from 1500 rupees straight to 10,000 rupees per megawatt. Hello everyone, I'm Tushar Jain, SEBI registered research analyst. Today, in this episode on 29th March 2026, we are decoding a massive fundamental shift happening not just in India but across the global power sector. Based on our latest macro data and deep technical analysis, we are anticipating significant positive breakouts in power generation companies over the next few weeks. Let's dive into the data, charts, and the global watch lists. Let's start. Let's start with the fundamental trigger. The supply squeeze on paper. India has about 58 million tons of coal, but the ground reality is different. Around 12,500 megawatts of power plant capacity, mostly those reliant on imported coal, are facing critically low fuel stocks. Why is this important? Because imported thermal coal is currently costing 2 to 2.5 times more than domestic coal. To prevent blackouts, the government has invoked Section 11 of the Electricity Act, forcing these imported coal plants to run at full capacity. This creates a phenomenon known as the duck curve. During the day, solar energy keeps electricity cheap, but as the sun sets and the evening cooling demand spikes, the grid faces immense pressure. This sudden surge is pushing peak exchange prices to 10,000 rupees per megawatt. For power generating companies, this translates directly to expand margins and massive revenue spikes. But this is not an isolated Indian problem, as we head into the peak summer months of April, May, and June. Global grids in the US, Europe, China, and Japan are facing identical pressures due to extreme heat waves and tight supply chains. When demand aggressively outpaces supply, pricing power shifts entirely to the utility and generation companies. Now let's align these fundamentals with technical analysis. As many of you know, our research heavily utilizes various methods such as price volume analysis, WD gain, Elliott wave, Fibonacci, etc. Looking at the broader utility and power sector, these stocks have spent past few quarters in complex corrective phases. However, the impending summer demand is acting as a catalyst, pushing many of these global charts out of their corrective wave C and into a highly impulsive wave 3. Wave 3 are typically the longest and strongest phases in an Elliott cycle. Furthermore, looking at the Gann time cycle, we are approaching critical time pivots over the next few weeks when price and time square out simultaneously with a fundamental analyst like a global heat wave, fundamental catalyst like a global heat wave, we see explosive momentum. Here is the global watch list of companies perfectly positioned for the breakout. If we talk about Indian market, then we can look at the NTPC, who's the biggest beneficiary of the 270 gigawatt peak demand on the Gann charts. NTPC is holding strong above the crucial support angles and showing aggressive volume accumulation. Apart from this, Tata Power and Adani Power are also showing excellent structural setups. If they cross their immediate gain square of 9 resistance levels, we expect a swift upward trajectory. In US, we can see next era energy, whose ticker name is NEE, a dominant player in the US, especially exposed to the extreme Florida heat. Technically, NEE is establishing a strong base and preparing to break out its major downward channel, significantly the start of a fresh bullish impulse. Duke Energy, DUK, and Southern Company, SO, they are solid. They have solid defensive charts transforming into offensive momentum plays. In Asian market, if we talk about China, then we can consider China Huang Group and TEPCO TEPCO for the Japan. And in European market, we can consider ANEL SPA for Italy, EDF for France, and Iberdrola for the Spain. Here is our curated global watch list detailed with specific technical outlooks for the next 2 to 3 months, coinciding with peak summer energy demand. So first, we should consider first. Let us discuss about the NTPC, the primary beneficiary of India's 270 gigawatt peak demand, which we have discussed earlier also. Uh, for the NTPC, for the next targets, we can consider 390, 405, and 420 with the stop loss at around 350. For the Tata Power and Adani Power, we can consider uh, for the targets Tata Power, we can consider 400, 420, 440, and for Adani, we can consider targets of 170, 190, and 200. Also, stop losses for the Tata Power, we can consider 360 rupees, and for the Adani Power, we can consider 130 rupees. For the US company Next Era Energy, for the target we can consider $95, $100, and $110, and stop loss should be kept somewhere around $85. For the DUK, that is Duke Energy, we can consider targets at $140, $150, and $160 with stop loss at around $120. For the Southern Company, the targets can be at around $100, $110, $115, and uh, the stop loss at around $85. To summarize, the convergence of peak summer demand, critical coal shortages, and textbook Elliott Wave 3 setups provides a high probability trading and investment window in the power sector globally. Keep a close eyes on the volume breakouts in these stocks over the coming weeks. Before we wrap up, there is a standard disclaimer. And I am a SEBI registered research analyst. The research and technical analysis discussed in this video are for educational purposes only. Markets are volatile, so please consult your financial advisors and conduct your own risk management before taking any positions. If you found this global and technical analysis valuable, hit the like button, share this video with your fellow traders, and subscribe to Ajayastromoneyguru for more deep dive market insights. Thank you for watching and trade safe.